Good afternoon and welcome to Markets Today. It's another day to have a conversation about the markets, investments, and the economic performances across the globe and in particular in the country. Today we are having conversations around the trade deals that we've had as a country. The president has been in Dubai. That has resulted in some trade deals, some more. A few weeks back, we saw Saudi Arabia importing goats and cattle from Kenya. Right now, there's a tiff in DRC after the deputy president of Kenya declared to the nation that apparently there is no single cow in DRC and that they need Kenya desperately. This will form part of our conversation today. But before we get into the conversation, let's go to the market and have a look at how the market performed in today's trading activity. Sanlam Kenya topped the list of the gainers for the second day running, having gone up 7.31% to close the day at 13 shillings 95 cents. Umeme Limited closed the day at 6.9%, settling at 6 shillings 20 cents. Williamson Tea Kenya PLC closed the day at 136 shillings, being 5.43% up. Standard Group PLC made it to the top 5 today, settled at 15 shillings 65 cents, being 4.33% up. And the last but not least in the top 5 is Asini PLC, closing the day at 21 shillings 50 cents, being 2.63% up. Let's go to the losers. Samia Africa PLC is the biggest loser today, having closed the day at 2 shillings 44 cents, being 6.51% lower. It's followed by TPS Eastern Africa. It was in the green yesterday, among the top 5 gainers. Today it looks like supply outstripped demand. It did 6.15% lower, closing the day at 12 shillings 20. TransCentury PLC closed the day at 1 shilling 18 cents, being 3.28% lower. Nairobi Business Ventures closed the day at 5 shillings, being 3.1% lower. And finally, I&M Holdings PLC was the last one in the list of top 5 losers, closing the day at 20 shillings 55 cents, being 2.61% lower. Let's look at the big movers of the day. Still significant performance. Safaricom PLC did 6.8 million shillings. I think it's still riding on the Ethiopian progress. Cooperative Bank of Kenya did 3.2 million, followed by Equity Group Holdings that traded 1.4 million shares. KCB PLC traded 683,000 shares. And then the last in this list is Kenya Reinsurance Corporation that did 522,000 shares. Quite an interesting performance. I think we have seen an improvement compared to what we saw last week, which was generally 1.2 million or 2 million thereabouts. This is some significant movement in the right direction. Well, we are going to have a conversation around trade today, the opportunities in Kenya's recent trade deals. And to speak to us on this subject, I'm joined by Steve Biko, who is a senior analyst. He's also from SokoDirectory.com. On Twitter, he's Soko Analyst. That's the brand we've known for years. Karibu sana, Steve.
My pleasure to be here. Thank you.
Thank you very much. What do you make of the movements in the market today?
Well, what I know is foreign investors actually controlling the market at 67%. We've seen at least 97% of retail accounts locally are actually dormant. So it's a dynamic situation whereby there's need to push for civic education around investment in the stock market. in terms of shares, in terms of bonds, in terms of treasury bills, and basically to create confidence in the market, because many people look at the market as a gambling casino instead of an investment opportunity, which is actually the heartthrob of the economy of Kenya. But looking at the market, of course, the big gainers, you've looked at Safaricom, you've looked at KCB, Equity. We have more or less 10 counters that are actually driving the market. So there's need for more investment in the market. There's need for more. Kenyans have money to invest. I think there's need to look at more diverse opportunities in terms of startups, whereby Kenyans can actually use the stock market to be able to create investments for them and look at how they can be able to plug into the economy. I mean, if you look at what COVID has taught us, the need for self-sufficiency in terms of manufacturing, construction, supply chain management, a bit more value add in terms of what we produce as a country, and that is actually what's looking at the trade deals we are actually making across the globe. But at the end of the day, there's much that needs to be done at the stock market. We need reforms at the Capital Markets Authority in terms of governance, in terms of oversight. We need reforms at CBK in terms of helping to nurture better, more regulated options in terms of investments, because the regulated investments that we have right now, they're limited. If you look at how much money we have in the unregulated environment, it actually supersedes what we have in the regulated environment.
What money do we have in the unregulated
We're looking
environment?
actually
Or what instruments are there?
Well, players like Zimele, Amana Capital, Saiton actually have significant investment options in the unregulated market. We're looking at over 40 billion in the sector. So Kenyans have money. The challenge is lack of trust in the system, lack of proper awareness, and basically more innovation. I mean, we are a country that is known for innovation. So I'm looking at, I mean, it's funny when you have people at CMA or NSC who have no idea what a CDS account is, or they don't have their own flesh in the game.
Yeah.
They're simply there to earn a salary and do things. And it actually puts us at a disadvantage, because we're looking for ways to raise capital for investments in manufacturing, in agriculture. And the NSC will actually be the perfect
place for smaller players.
Yeah, so CMA, Central Bank, and other key players need to come up with a way whereby startups can be able to raise money at the stock market. It will be the easiest way.
I think they tried this using the GEMS, a segment of the market. Growing an enterprise segment, and it has not picked up.
There is no way GEMS will be able to grow if you're looking at stocks like Mumias or Uchumi or Everready still trading at the market. Some of us who bought KQ at 110, right now it's at, we'll never be able to recover. So unless certain things are actually reformed at the market, games will never be able to pick up.
Yeah.
You get. So there is need for visionary leadership that can actually be able to push for more players to come in the market. If you look at Nigeria, their startup economy is actually picking up heavily. It's actually leading. If you look at how much money Nigerians are raising in terms of startups, it's crazy. Look at South Africans, look at Egypt, look at Mali, Mauritius. So Kenya, we're actually sitting on a gold mine on what needs to be done. We need the government to actually return, the issue of civic education in terms of investments.
Yeah, but before we go into education, you're saying that there is a way in which the startup businesses can get investment in the stock market.
It's basically
how
the
is
issue.
this going to happen?
The issue is to look at the current laws existing in terms of how people can be able to invest and list on the stock market. Reform that. Look at startups, look at private equity, look at how much money is actually coming in, look at the unregulated investment ecosystem and what needs to be done.
Yeah.
Get all the players in one room, reform the laws, bring in Parliament and Senate and educate them on what needs to be done for this to be done. And then tell startups, if you're trying to raise money, if you're a unicorn, for example, and you want to raise $1 billion, this is your opportunity, because we've seen,
and it doesn't really have to be $1 billion. Most of them require even 100 million shillings actually.
And Kenyans, I know, because every day we're actually getting, where can we invest our money? So we're looking at other investment players like Ndovu Investment, which are actually looking at traded exchange amount. We're looking at money market funds offshore, where They take your money, break it down into different aspects. We've seen them participate in the government infrastructure bond, which was actually very interesting. And we've seen how much government...
And they oversubscribe.
Exactly, showing you that there's a lot of money that Kenyans want to invest, but there's no opportunity. We have a lot of money sitting in fixed deposit accounts, which is actually not good for the economy at the end of the day. It's good for the banks and their shareholders, but the overall effect on the economy, we need that money moving in the economy. We need that money moving into smaller businesses so that can be able to create jobs.
Yeah.
We're looking at the moving sectors right now are service, construction, and advertising, basically, which depend on the core aspect. So we're looking at the apex of the economy doing well, but the bottom bit of it is not actually functioning well because
as much.
Poor laws around it, too much regulation around it, lack of reforms, lack of innovation because of a toxic political and economic environment.
All right. We'll come back to the market, but I want us to now take a tour around the trade deals that Kenya has signed over the past 5 years. It looks like the second term of President Uhuru Kenyatta, he has concentrated more on ensuring that he pens down as many trade deals for this country as possible. We've seen this with the UK trade deal, we've seen this with his deal with in Doha now, we've seen that with the Saudi Arabia a few weeks back, the DRC president was here. It looks like this is going to form a significant part of his legacy.
I think the one thing that I should give credit to the president is the way he's actually pushed for Kenyan businesses to have a presence in across. And one of the biggest deals, forget the UK one and the Doha one, look at DRC. DRC has 90 million people. In terms of business, it's huge.
It is. That's almost double.
By 2025, the overall population of East and Central Africa will be 500 million people. And at the center of this is actually Kenya in terms of being the strategic hub for financial services, agriculture in terms of agro-processing, value add, in terms of retail business, in terms of manufacturing. We're looking at value add in terms of water, juices, and processed coffee, processed tea, processed grains. So the opportunities are huge. If there's anything we've learned from COVID is the need to actually be self-sustainable in terms of supply chain.
Yeah.
We've seen drop in terms of manufacturing for specific industries like motor, phones because of the semiconductors. Lack of raw materials to produce them disrupted supply chains. And this has made countries to actually look at ways to be able to import in knowledge, the know-how, to be able to create their own industries. And this is what the government is trying to do, whereby we create partnerships with countries where we can be able to get the knowledge, the know-how. The UK one is actually very critical in terms of how we can be able to look at the manufacturing sector, the semiconducting business. We've seen the president opened a factory in Kimathi University that actually produces local semiconductors. This is actually very critical for us to be able to do this in the region. If you look at what's doing in Dubai, basically we're looking at exporting human resource, which is actually very important. We are exporting financial services. We're exporting livestock to the region.
A few weeks back I saw Saudi Arabia getting our cattle.
And that's very important because we're looking at how the northern part of Kenya can actually be a source for export in terms of livestock and agriculture. We're looking at how instead of us exporting raw products like avocados, coffee, how do we process them locally and be able to sell now refined value add. And this will actually be very important because it will create a complete capital circulation in the economy. And this for me, I know I have issues with the current administration, but in terms of trade deals, this has actually been very critical. And this is something that's going to create thousands of jobs, that's actually going to improve our forex account deficit. It's actually going to improve our shilling because we've seen our shilling really performing very badly against key global currencies.
I hear you. You said I forget about the UK deal, but I really don't want to forget about it.
Well,
it's a big one.
It's huge. The only challenge I'm having with it is the problem with this administration. They're very cagey with releasing the information.
Certainly.
We're just getting tidbits of it. And you're getting the social media tidbits.
The marketing angle without necessarily the real fundamental.
No.
components.
I think the people who the president is inviting to go with, the Chamber of Commerce, the Kenya
KEPSA's
KEPSA, the Kenya Investment Office, is actually letting down the president in terms of being able to talk about this. The details, because when we're talking to the public, we want to be able to espouse and expound on what these deals mean.
Yeah.
The deal with UK is actually important, and you know, it also touches on our security, touches on military training, touches on our core manufacturing aspect. We're looking at the alcohol business in the country. We're looking at textile industry. We're looking at actually what are we importing back. And the challenge I'm having is the need for us to, what are we gaining as a country? Yes, we're actually accessing the market for these unique countries. But what are we accessing the markets for? Because we also need to import in the knowledge to be able to export processed products. And for me, I've actually sent a request to State House to actually get more information on the Dubai deal, especially on the livestock, because it's actually very important.
Yeah.
And the UK one. Why I was keen on the Congo one is because one of the key partners in it was actually very open with the information, and we've been able to see what we are going to benefit
from the Congo one.
From the Congo one. And if you look, it's a multi-billion. We're looking at business deals worth 400 billion in a year with the region actually.
Yeah.
We're looking at logistics, we're looking at security, we're looking at agriculture, we're looking at processed value add in terms of maize, wheat, sorghum, cassava. We're looking at coffee, and on a larger scale, because if we're able to supply the 90 million people in Congo, forget the dairy one, which is bringing problems at the moment, and by that they have more cows than Kenya. So that is something for the Foreign Affairs Office to be able to handle. What I think the president has done that will be actually fundamental for his legacy is to leave critical infrastructure where the next leadership can be able to hang on and actually do more. Yeah. Because we're looking at when you look at the deals is done, they're actually targeting the big four. They're looking at education, we're looking at manufacturing, we're looking at food security. And food security is actually very important because we've seen how the last years have been in terms of farming for the country. We've seen the challenges we're having in terms of sugar. So these are the issues that the president has actually been able to look at. Textile is important because I've seen you trying to revive our cotton industry,
yes,
which is actually a focal point in the UK deal. We're looking at pyrethrum. So I'm seeing the president pushing to revive the core aspect of our economy, so that we can be able to we are an agrarian economy at the end of the day, but I think we need to move from agrarian to agro-processing, which is actually very critical. And the only way to do that is actually to have markets.
Yeah, thank you for bringing that up. I was a bit uncomfortable when I saw cows going into ship to Saudi Arabia, or Qatar at that time, I think. Why is the Middle East interested in the whole cow? Why can't we, for example, send out the steak? Or if they want the hide, or why can't we process it before we take it out?
Four issues. One, we are not able to process to the quality of international standards. We cannot process our steak to UK or US or to Dubai.
Why is that?
Quality.
I find that offensive on many fronts, because
No, we've seen the Ministry of Health actually releasing information on how we handle our livestock products.
It's not acceptable internationally.
I mean, the chemicals we use, the processes we use, actually, one of the reasons why cancer in the country is actually high. So we have a challenge as a country in terms of how do we process our products for global markets. The stringent measures by this country is actually very high. Secondly, you've seen what China has done. In the 90s and early 2000s, what China did was to import to the country cocoa, seedlings, import to the country cows from different parts of the world, to see what, like, we have particular cows. Uganda has particular cows, you know, like the long-horned ones and things. So every cow has different, I mean, the delicacy of the meat is different. Now you see China has become the biggest exporter of cocoa. In a decade, they have outdone Ivory Coast and Ghana. You get? And that is what Middle East is actually doing. They're importing a lot of cows, they're going to experiment on them.
Yeah.
Then they're able to replica through genetic modification, where they're going out to export dairy products, cheese, ice cream, processed milk. So in another 5 years, we'll be importing products from them when we actually should be doing that. Africa has actually been sitting down and not being able to move with the times in terms of technology. How can you tell me that China is now the biggest exporter of cocoa, yet cocoa is actually domiciled in Africa, in Ghana and Ivory Coast? We were blessed with that. So that's what actually
and of
Qatar
course what
is actually
follows
doing.
then is soon and very soon China will be the biggest exporter of chocolates.
Actually, no, they're actually the biggest exporter of cocoa to Switzerland.
But
And
soon
Ghana told Switzerland that you cannot import our cocoa, you come and set up a factory here. So Switzerland is wondering, why do we need to set up factories in Africa when you can actually work with China without a problem? So African countries are actually playing catch up, and we need leadership like what we're seeing with Uhuru in terms of creating markets, then coming back home, bringing back the knowledge, know-how, and actually, what's the word I'm looking for? Setting up factories across every county. Because now what we need to focus on is manufacturing. We need to focus on agriculture and manufacturing to be able to have the hybrid of agro-processing.
I love the way you're thinking, because I'm thinking in the same direction, but I'm told we have to go for a break. When we come back, we'll talk about the DP's remarks about Congo and how this will affect us. We will also talk about the trade deal with the US, and we'll talk about the other regional arrangements within Africa. Don't go away. Stay tuned. We'll bring it back to how it's affecting the markets as well.